Hello guys! If you're watching this video or usually watch on YouTube, chances are you have come across the eToro ad about Steve and Dave. And what can I say? It is quite effective, at least on me. Well, it just so happened as well, to be fair, that I am looking for a broker during that time. And it is something that I want to look for that will allow me to trade US stocks here in the Philippines. So far, most of the ones I saw haven't been that good for me. Most would require a specific amount to pay per month, such as $100 per month, which is a big no, and also an initial minimum deposit of around $200 or $2,000 if I'm not mistaken, something around that. So those are quite large numbers, especially if you are just starting. So technically, they're not good for someone who wants to begin investing in the US stock market. Now, since I come across the eToro ad, I decided to try it and see for myself if this one works, if we could really trade US stocks here or any of those sorts. And true enough, it was actually a good, at least broker in terms of that. But technically, in that sense, Steve and Dave is actually a blessing. So the only thing is that you need to have control of yourself because it's not easy to trade in the given platform. Meaning, it's easy to gain and lose large amount of money with the snap of a finger. Why is that? Because they made the platform so easy to use that you can simply just click a button to open a trade and click another button to close the trade. And it can also be quite dangerous because of these key concepts that I will discuss. And well, before I discuss those, I wanted to make you guys know about the rules that I've set for myself when I'm trading, especially for this US stock, now that I had a broker. So, number one rule that I have is I will not trade CFDs with leverages. So, CFDs or contract for differences, which I can discuss later on in the video, probably. And then, for number two, I will only do swing trades for US shares with up to $200. So anything more than that, I will be doing or using for long-term investing. As I am planning to use this to create my dividend portfolio or a long-term investment portfolio, which again, I can discuss probably in another video or show you later, depending on how this video is gonna go. So, just a background as well for those of you who are not familiar with CFDs and why it's a bit dangerous, especially if you don't have much control on yourself, is because technically CFDs or contract for difference is a financial contract that will be used to pay for the differences in settlement between the price of the opening and closing of trades. So initially, what you are using here, what you're paying for here is the contract. You're giving your broker an initial amount, but your broker will technically be the one who will be buying the asset, and the asset or the shares is not going to be owned by you. It's just that whatever is going to be the differences that's going to be gained or lost in that transaction that you're going to be doing with your broker is indicated in that contract, and that is what you will be gaining. So it's a bit complicated, but probably I'll have a separate video to explain this more. And why is this something that I don't want to use? Well, because one, you don't own the asset or the shares. And then another thing is, of course, the danger of leverages. So for leverages, think of it as a multiplier. So if you can only afford a certain amount, let's say $200, and you want to have a multiplier that will possibly increase the amount of shares that can be bought, then you can do so through the use of leverages. In that case, let's say we have $200 as your capital, and you choose a multiplier of 100 times, so 100x in the broker app or in eToro app. That will make your $200 around $20,000. So it can afford to buy shares that's amounting to $20,000. Now, the danger in that is you don't have $2,000. The differences from $200 up to $20,000 is what is your broker lending to you. So you don't have that money. You're technically borrowing from your from your broker. And if the stocks that you put this on increase in shares, then that will also multiply the gain that you will have. The danger is that if it does go down, you will lose. It will also multiply the amount of losses that you will have. So it's quite dangerous. That's why I decided not to try this one, because I did have an issue with this before, last 2017, which I'm probably also going to do in another video to tell you guys what happened then. But these are the two rules that I had. And what I will just am planning to do is just to buy the shares and then swing trade as long as it's not above $200. So that's the plan. But of course, sometimes you can be greedy. And on a bad day, it's not good to trade. So I'll show you what happened to me in the eToro when I was not in a good mood and I had traded CFDs and leverages. So technically, I broke my rule.
So just to show you guys my history of trades in eToro. So I did an initial deposit of $200 here just to test the platform and if I can do swing trades with the blue chip stocks that we have. Most of them are tech stocks or stocks from companies in the tech industry. Okay, and then I was doing swing trades, just earning $1 every time. So it was good. At least every time I do it, I was gaining $1 every so now and then for the trades. And then of course, since Tesla is a bit big this November with the addition of it to the S&P 500, we had a large profit here. So technically, I've been gaining every trade that I have, even for this one. So since I had the momentum, and you know, that's why when you are trading, you also need to be humble, right? Because I kind of got the momentum of doing swing trades and I kind of got arrogant per se, in the sense that I felt like I know this, I know how to do this and I can gain more by doing this. So I tried to buy gold, which is a CFD, and I did leverages on this one. So 20 days after I started, I already broke my rule, which was to trade CFDs with leverages. So all of these had times 50 as a multiplier for the leverages. So technically, I'm borrowing the difference between the initial $200 that I had and then times 50 of that to the broker or from eToro, right? But I was gaining in this case, right? I gained $3, $8, etc. So far I was building up profits of around $60 since my initial deposit last November 6, and that was great for 20 days. With just $200, I already had around more than 25%, if I'm not mistaken, or at least, yeah. So that's the case. But the problem was, I got a bit overconfident with what I'm doing. So I had a bad day, and then I decided to trade, and because of that, I lost a lot on the same day. So that was like November 30. I did another deposit, thinking that this would be for the month of December, and I will be using this one to trade more. So I was aiming for having a long with the first 200 deposit that I've had, and then for this next $200 deposit, I would do another swing trade. But look at what happened here. So you can see here a loss of $64, $57, and $33.21. So technically, I lost more than I gained, and now what I had is actually $100 below my initial deposit. And another thing was, I had a deposit here last November 26. So just going back, let's do a time check here. So this was the one that I thought was supposed to be for December. So that's what I've explained earlier. And this, I got carried away because I wanted to earn more, per se. So I deposited more, and then I bought more gold. I averaged down. So by averaging down, because I was losing the profits, right? I was losing in terms of the stocks that I bought since it was going down. I actually bought it around $1,800, and then it went to $1,700. So I thought if I average down here, right, I'd be able to gain what I've lost once it reaches back the $1,800 price point for gold. But you see, I did something stupid because I was trading CFDs and we were doing leverages. So there is something called stop loss, and you usually set it when you're doing leverages to avoid your account from going zero. I think eToro does not allow to have it negative value, so you won't owe anything that is below what you have initially paid. So there I had a specific stop loss set and it was reached. So I don't know what happened to me during that time, but I had a bad day. I wasn't in a good condition, and I was trying to win this because I wanted to have a good news for that day, per se. So when the stop loss was hit, it sold the shares that I've had at this point. This was it. This negative $64.23. Stop loss was not yet hit for the following, so I still have time to change it to a lower one, probably 1600. But I didn't. What I did was I sold everything. So I just told myself, okay, this is a loss. Just sell everything because I was having a bad day. So probably make it a more bad day. So that's what happened. But after that day, I reflected and tried to check on myself and realized that okay, we can still do this. So probably what we've lost, we'll work on it again. So this is a lesson learned, and I reminded myself to simply just follow the rules that I've set. So no trading of CFDs with leverages. Just follow what was initially planned, and then that is the goal. So I did try to win it back on the same day by buying Ethereum, which I said I will hold because of the good news for the ETH 2.0 news that it will go beyond $2,100 if I'm not mistaken. But those are news, and we're not sure if this is gonna be true. Probably just another prediction, but I did try to bet on that. And then when I reached a specific point, I decided to sell it and just really convince myself to follow your rule. No more CFDs. Just buy the actual assets and then buy the shares. Just build your dividend portfolio, which is what you are aiming for with this broker. So that's what I did. Right now, we were able to get back at least $30 in terms of equity. So in terms of my portfolio, I have it right now under, let's see, Neo and Dropbox. So just an explanation for this one. I bought Neo as an EV company that is technically battling or in rival with Tesla, which is going to the moon right now. But the idea is for Neo, it's something that has great potential, especially in the EV industry. Although there is a bill right now that is being passed in the US that will that's aiming to delist the Chinese companies currently in the US stock market if they do not follow specific rules. But it's not something that we see happening in the near 2 to 3 years, probably, because there's going to be a lot of discussion about that, and probably Chinese companies won't let their shares be delisted or their companies be delisted in the US stock market, as they are also earning from that. In the same case for the US, there's a probability that they will not allow simply delisting them because US citizens or the US people will lose the amount that they bought for those shares. So that's the idea. So I bought this with the potential or with the idea that it's going to be increasing in value, and it's still something that we can afford as opposed to Tesla and all of those other stocks. But I think this is a bit overvalued in terms of its market cap. But yeah, it's something that I will hold for now, or probably once this gain a profit, I will move it to a different company that doesn't have that danger of being delisted. But let's see. For Dropbox, I bought this one as really for long-term investing because it's still very cheap, and there's a lot more potential for this company to grow in the next 2 to 3 years. So that's why I'm buying this as a long-term one, and probably gonna add to the portfolio that I'll be holding for a long term. So that's basically it. So the idea that I wanted to have, or message that I wanted to have in this video, is that if you have if you plan to trade, especially for volatile markets like the US ones, for the Philippines it's a bit less volatile, so there's not much danger of you losing that much again. And then the idea is that you're trading with volatile market, and then you're trading CFDs and leverages, so there's really the big possibility of you gaining more, which is good, but also you losing more. So that's something that you need to be careful with, especially if you're not an expert in this type of trading. So the idea is, if you just want to make the most value for your money, do invest it in stock market, but do it for the long-term one. Don't do swing trades if you do not know how, if you are not familiar with what you're doing, or try it in a virtual trading platform. So eToro also has that virtual trading functionality, wherein you can try to trade and test how you are performing, so you get the hang or get more familiar with the market, etc. So yeah, but that's it. So this video just basically shows you that you can trade US stocks and you can buy US stocks even when you're in a PH using the eToro platform. And of course, do not be greedy. Make sure to follow your plan when you're trading, and yeah, breaking the rules will always do no good for you. So that's it. So hope you learned something, or hope you did see something from this experience, and you can put some comments below if you have any tips or advice in terms of that, or you can share your experience of having this type of greediness at the back of your mind when you're doing trading, or being a bit overconfident with what you have, since you're earning, and then you decided to put more eggs in that specific basket, and then you just lost all of those eggs. So yeah, that's it. So thank you guys. See you in the next video.